All right, guys, it gives me a great deal of pleasure to welcome someone to the Rebel Capitalist Show that I have really been looking forward to speaking with. That's an understatement. He is someone that really needs no introduction. He is Raoul with Real Vision. I started my macro journey in 2012. I knew absolutely nothing. I didn't know what a bond market was. I didn't know what the Fed was. And when you guys started Real Vision, I was right there watching every single video, and there is no way that my YouTube channel or my understanding of macro would be where it is today without you and without Real Vision. So first and foremost, thank you very much for everything you've done and the content you've produced.
Wow, I didn't expect that, but thank you. I really appreciate it. And that was the whole point of doing it, is to give everybody the same level of access and understanding, because we realized that it wasn't fair for people, and you've been driving this message as well. It's not fair for people not to have the information that everybody else gets, or that the more elite people get. And, to level the playing field, I mean, it's been a great journey. And it's great that you've been part of that journey as well, because you've gone out and done your own thing, and that's been incredibly successful as well. So well done you.
Let's get into the interview here. You did a video the other day that I've watched probably 10 times.
Oh my God, what have I done?
It was this Bitcoin life raft idea. Right. And man, it was really, really good. So what I'd love to do to start is have you kind of summarize your take on this idea, and then take it to the next level and say, okay, we understand what Bitcoin is. We understand the functionality. We understand the benefits. We understand the problems. But what if Bitcoin was global money? And that's what I've been trying to think through for the last week or so. It's like, what if all there is was Bitcoin? That's it. And just very similar to maybe gold or precious metals a couple hundred years ago. So anyway, could you summarize that idea, and then let's just keep going and take it further into the future?
Yeah, I've been talking about this life raft idea actually for some time. I think I probably first wrote about it for Global Macro Investor, my research service, back in 2012. When I was in Europe and we almost lost the whole European banking system and almost Europe itself. And, after I'd seen Cyprus, where everybody got bailed in, i.e. you're a depositor in a bank, minding your own business, the bank goes bust, they take your money. I realized that, okay, this is a big problem. And, having gone through the financial crisis and seeing nobody knows who owns what. So we have, and then the debt upon debt and derivatives upon derivatives, looking at all of this thinking, Christ, where's this going to go? How is this going to play itself out? I know, there's been a lot of talk, well, they'll inflate their way out. But inflation, deflation, they're more nuanced than I think anybody really expected, because we have wage deflation and we have inflation of assets. And that wasn't something we quite got our heads around early on. But we're now realizing it's much more nuanced. What it generally means is savers are going to get screwed in this environment to benefit the debtors. Now, the next phase of this battle seems to be the central banks and their digital currencies. What they're doing here is realizing that the digital infrastructure is the way forward for making money transferring mechanism much simpler, but they also realize that they can change economics. We've been stuck in this kind of weird world of monetary economics versus Keynesian economics, i.e. fiscal stimulus versus monetary stimulus, and a number of different things. And the central bank digital currencies are about to change all of that, because you can give different stimulus incentives to different people. So that's the rise of behavioral economics, much like Facebook does.
Right.
And so there is also a big talk about, okay, is there a new Bretton Woods coming? What is coming here? What do the central banks want to do? Because they're over-reliant on a dollar system. The dollar, the US, is 25% of world GDP, yet the dollar is about 80% of all transactions on Earth. So there's this problem that we talk about, the dollar shortages and the Eurodollar markets and all of this stuff that gets wrapped up into it. And other nations, sovereign nations, feel that it's excessive. So if you're South Africa and you're a commodity producer, you're beholden to the US dollar at all times, and your dollar funding is everything. And that's true of even China. So countries have started to say, listen, is there another way? And the IMF and the BIS are both talking about this, which is maybe banding together and creating like a global currency basket, not like the euro, not a single currency, but a basket that Facebook Libra had decided upon with their groundbreaking idea of including the dollar in the basket. Because right now we understand currencies denominated against the other, right? Dollar yen, euro dollar, stuff like that. But if the dollar's part of the basket, what's the denominator? It's probably global money supply.
Yeah,
so
like gold was. Wouldn't that be like going all the way back to that?
That's right. And so, but gold, everybody was pinned to gold. And we'll come on to this pin to idea later, because that's the Bitcoin discussion. But everything was pinned to gold. But this is like a basket of currencies, like the European exchange rate mechanism we used to have in the past.
And that goes back to Keynes, right? I think you were talking about that, the bank core.
Yeah, that's the bank core idea. Yeah. And this is roughly what that is. Now, the problem is as we get co-opted into this new digital system, we're now totally beholden to what the central banks choose to do. I think some of it's going to be amazingly powerful. I mean, if we could have done the fiscal stimulus directly from a central bank to a restaurant in Minnesota, okay, that would have helped massively, but we hadn't. We got the banking system that doesn't function, that's in the way, and other intermediaries. But this whole mechanism can change that. So there's some really good benefits. Behavioral economics, the plus side of them are good. The bad side is you can manipulate people, and governments tend to get nefarious.
I think the words you used with Anthony Pompliano, hopefully I'm pronouncing his last name correctly, I got it written down here. It was programmable smart money. I think that kind of hits the nail on the head as far as what this could do.
Well, I could give you money that you have to spend in 24 hours and you can only spend it on groceries.
Right.
That gets rid of all of those coupons that they give out in the US, or, it can change basically the whole structure, completely change it. Now, the problem is that there is a good side to it, and I think it's good, and I think it's better than what we've got. The bad side of it is it puts even more power in the hands of the creators of fiat money, the central banks.
Right.
So this is where Bitcoin starts to really stand up on its own, because this system is digital. Bitcoin is natively digital. In fact, it drove central bank digital currencies. That's why they exist today, or are just being built out. But it gives us a way of voting with our money outside of the system we're in. So, this is why, if you look at the top traders or users of Bitcoin around the world, it's Venezuela, it's Colombia, it's Latin American countries, it's South Africa, countries who have dollar funding problems and weak currencies. So people understand what they can do with it. It's much more effective than gold to kind of step out of the system and say, well, I trust this thing more. Now, we will likely get taxed for that, and there's not much you can do about it. Yes, you can try and operate entirely outside the system, but my guess is you have to on-ramp and off-ramp to your own native fiat currency to pay your taxes or whatever it is.
And just to be clear, in your view, it's better than gold because it is programmable. You can hold the banks or whomever's holding it, you can hold them more accountable because it's all on the ledger, and it's just far more efficient. Is probably the best way of saying it.
Yeah, that's right. Because let's say you're a central bank and you're just using gold, and I want to give George Gammon a stimulus because his restaurant in Minnesota is not working. Right, what do? I transfer gold to whom? Well, it's not to you. So then it has to go to a bank, and the bank needs, the whole thing still requires intermediaries. But with this, I can give you direct money with terms and conditions attached into a contract. And this is not the first time it's been done. The Japanese tried this back in the mid to late 90s, where they gave vouchers to people with a time element attached to it. So they said, we're going to give you a stimulus, but you have to spend it by a certain date. Now, bizarrely, which most economists didn't realize, is the Japanese saved it. Because they were so, that whole balance sheet recession idea of repairing your balance sheet, they didn't want to spend it. So it's not, not necessarily will this work, and not necessarily will it drive inflation and all of these things, but it's just a very interesting system.
Let's add to that about the swap lines, because a lot of people have been hearing that. That's something that you discussed, I think, with our good buddy, Alex Saunders. And you talked about either Bitcoin or Ethereum potentially solving the existing problem with the dollar funding. So basically XYZ Corporation needs dollars, but they're they can't get it from the bank. And even though the Fed sets up a swap line, it still has to go through the bank. And if they don't have the cash flow to service the debt, the bank isn't going to give them the loan. So you might as well have nothing there. So how does Bitcoin or Ethereum solve that problem? And when you were talking to Alex about that, in the back of my mind, I was thinking, but does that solve the problem? I understand it's far more efficient, and the mechanism for getting them the money is more direct. But if they have an insolvency problem, then it doesn't really fix it, because at the end of the day, it's about the debt and the cash flow.
What I was talking about is Bitcoin's superiority as a collateral asset.
Yeah.
So because as a collateral, US Treasuries are the world's collateral, right? That's the form of US dollars that the whole financial system uses as collateral.
Yeah.
The problem is with that collateral is the US can issue as much of it as they want. So the intrinsic value of that collateral over time falls. It does so in interest rate terms, and it does so in terms of total supply of dollars. So as an asset, it's not a great reserve asset, but Bitcoin doesn't have that. So it has this solidity to it. Now, the problem it has is price volatility right now, because we haven't got to full price discovery phase. But its future potential superiority as a reserve asset is incredible. It's pristine, it has no claims on it. Mm-hmm. Well, US Treasuries have like 32 claims on the average Treasury bond.
Right.
So there's not that whole layer. And because you can figure out who owns it, and it's also immediately transferable, and you don't need a middleman, it's phenomenally good collateral. So in terms of the world's best collateral, this is probably it. I don't think you could have invented anything better. So that helps all countries and governments, because you're not then using dollars as a collateral, as the basis, because whatever collateral you need for the loans, well, imagine if you can use Bitcoin as collateral. So this starts to help some of the issues, but you're dead right. It doesn't stop the insolvency issue. Now, why do we have these insolvency issues? A lot of it is because of the shortage of dollars, that people need to borrow more of them to use it for trade. So it creates this endless amount of dollars that people need. Now, if you didn't have the dollar as such a dominant force, this is what the IMF and the BIS and everybody else are saying, then we don't need to have this reliance on the dollar, and we can start shifting away. Even the ECB have a huge problem, because their banks all fund in dollars, really. Because yes, they can get all the euros they want from the ECB, but all of the trade outside of the Eurozone is basically in dollars again. So everybody has this shortage of dollars. Yes. And then they change the regulations with Basel III that meant Deutsche Bank in the US couldn't make fungible a dollar in the US with a dollar in Europe. And it untethered the Eurodollar markets, which is the offshore borrowing markets for dollars. And because of Basel III, the European banks weren't able to issue more of this stuff, i.e. they had to delever. So it's created a huge problem for everybody. And it shows up sometimes in a stronger dollar, and other times in the lack of ability for foreign corporations to get hold of the dollars they need. And the Fed need to give these swap lines. But the swap lines go from central bank to central bank, who can give them to the banking system. But if the banking system doesn't want to give it to the corporate because they think they're a bad credit, the money doesn't flow. So Bitcoin doesn't solve all of it, but it probably helps a lot.
Bitcoin's greatest asset, potentially, is its scarcity. But then the last week, as I've been trying to really mull over this, I'm thinking, okay, it starts with full reserve banking. I mean, I took it all the way back to just, let's go to the beginning here, and how would this differ? And then you go into a free banking. I'm just talking about how it kind of evolved in the United States. So you had this free banking system where the banks would create their own IOUs, for lack of a better word, with gold being the backing. And then it was nationalized in the Civil War. Then you have the central banking era starting in 1913. But then taking it forward to Bretton Woods, I've had a lot of conversations with Snider. And Snider's thing is Bretton Woods was really the catalyst to the system of the Eurodollar system itself, because there's corporations or entities outside of the United States that needed dollars, and those dollars enough of them weren't getting outside of the United States because they weren't running a big enough trade deficit, let's say. So they had to create this system that we now have, and Snider would argue that that's the system that created the GFC in 2008 8. But that was due to a scarcity of dollars, right? If you want to look at it that way. And I've gone back and forth with the same Bitcoin guys that they give you a hard time, give me a hard time. And they're like, well, that's never going to be a problem because it's infinitely divisible. And I'm like, yeah, but so was the dollar. And I don't think the dollar got replicated just because you could. I think there was something else. And I was thinking, okay, well, if we just immediately went to a Bitcoin world where that was it, there was no fiat currency, it was just Bitcoin. Then how would other countries, get them? I understand through like the price specie mechanism that Hume talked about, and I'd like to go into that in a minute. But I'm thinking, okay, that creates scarcity. There's only 21 million, and it's not just being divisible. And if so, don't we just get right back to where we are today, but a more efficient system that we have today due to that scarcity? Am I crazy and thinking that way?
Don't forget, humans are humans. Credit's been around.
Yeah.
Credit's been around for thousands of years, and credit's not going to go away. And humans will create massive derivative markets, massive lending markets.
Yes.
We don't have a Bitcoin yield curve yet. And I keep talking about this, but when it comes, it means it has time value. And then I can lend it to you, you can lend it to me, and off we go, recreating. Because don't forget, everyone has this kind of rose-tinted spectacles about the gold standard. Bullshit. There was excess leverage, massive booms and busts, deflationary pressures, all of the same things. That doesn't go away.
Yeah.
It's because of human behavior. And because that's how we can generate growth, is by using leverage. So none of that goes away to me. As you say, it's a better system, but there's going to be claims on it. Now, the claims will be on a smart contract where we will know who owns what to whom and where we are in the subordinated stack.
Right.
Okay, that's fine, but it's still all there. And that's not that. So it doesn't change that. To have a hard money at the center of the world's monetary system just creates a lot of deflation. And so countries have to compete with each other in different terms. So it's not in currency terms any longer. So what way is it? Well, it's price terms in terms of labor or technology. Can I produce the goods cheaper than you? Or better than you? That's the only thing we can do, right? If we're in a perfect competition world where the currencies are the same, we have to find an edge.
Right.
And all of those things are deflationary. And so if you do have debts in a deflationary world, they go up in real terms. So I'm not sure there is a panacea. I don't think it exists. I think there's an inherent problem with humans and their risk-seeking behavior. Yeah. And that's normal. Because people want to believe there's a better way.
Yeah.
They want to believe that it's not us, it's them who cause the problems. It's not the central banks. It wasn't the gold standard. It wasn't any of that. It's us. We create it. Because if I can borrow money from you, if you own Bitcoin, and I say, hey, listen, George, can I borrow some of your Bitcoin? Because I want to pay I want to put a deposit down to buy a house. You'll say, sure, it's going to cost you 6% a year, and I'll give you my 6% a year. I use that, but it's collateral in the house, because that's normal. That's not going away. There is no unlevered world. It just doesn't exist. It doesn't even exist in small kind of rural communities in Africa. There is still leverage. There's always the money lender. I mean, the money lender is, the oldest profession on earth, or the second oldest. So it doesn't go away. And just because you've got a better form of collateral, it doesn't change everything. Yeah. But in the transition from here to there, maybe you can extinguish a lot of the dollar debts. Maybe there's a bunch of this stuff that changes over time. So you get to rebuild. And don't forget, from the Nixon period onwards, we had an enormous period of growth because leverage came with it. So, you can generate a huge amount of growth once you rebuild a system, but in the end, it'll be the same result it's always been.
Yeah. When you're saying that, it makes me think of people who look at a new president or a new Fed chair as a panacea. Oh, if we could just get the right guy or the right gal in charge, all of our problems would go away. They'd handle everything. And it's almost looking at Bitcoin the exact same way. I read an article the other day that interesting hypothesis. They said in the West, we've really moved away from religion. And yeah, I'm not going to debate whether that's good or bad. It is what it is. But they said that, but the human being still needs meaning in their life. So they looked at our political landscape, let's say in the United States, being so divisive. And their hypothesis was maybe that's because we've moved away from religion and people are trying to find something to fill the void, to give their life meaning. And we've done that potentially with politics, or, maybe we've done it with Bitcoin. Maybe we've done it with gold. Maybe we've done it with other things. I thought that was really fascinating. What do you think about that?
Yeah, well, I mean, we've definitely seen the rise of tribalism online because as sovereign societies, the countries we live in have become less societal. We formed our own societies. You and I met in our little tribe, which is Twit, right? Where we all hang out and talk and argue with each other and learn from each other. And that's what we do. And you will have different communities and I will have different communities, but those are our little tribes. So that's our new sovereign state to us, because digitally, borders don't exist. So I don't care which country you're in. You and I move around countries, but that doesn't make a difference to that. So I think that's interesting. But I actually did a lot of work for Global Macro Investors to try and get to the bottom of, okay, why is all this happening? Outside of the religious thing, which I think is true, and it's the changing nature of society. And I looked and I brought it back to World War II, and it could go back further. It could go back to World War I and the end of the British Empire. But really, World War II. After World War II finished, the record number of people came into the labor force. So 76 million baby boomers into the US. Okay, so by the time they were all getting into their 30s, much like the millennials are now, and I'll come into that in a sec, these people were competing against each other for wages. At the same time, we abandoned Bretton Woods. So that was another marker in this. But what happened is when you put 76 million people into the labor force, and at the time the population was much smaller, so this was gigantic as a percentage, wages never went up again, ever, in real terms. So wages stopped going up in about 1974 in real terms. Then, if you then wind forward a bit, so that was nobody's fault apart from the silent generations for having too many kids. And that was a function of World War II. So then the next phase of this is cut to the credit boom that came out of the Reagan-Thatcher years. What was that all about? Well, interesting enough, credit growth offset the lack of wage growth. It's almost perfect when you measure all assets against it. So people did what they thought was the logical thing. I'm earning less money in real terms, therefore I'll borrow to make the difference. The next phase of this came with the rise of technology, the PC obviously in the 80s, but really by the 90s and the internet. Okay, this was technological change that we hadn't really witnessed before. It was feeding on itself. It was becoming exponential. So that was becoming deflationary as well, because you'd get more productivity out of a computer than you could out of a person. And then from 96 to 2000, we had that whole period of the WTO. And the WTO basically opened the playing field that everybody can compete on labor price. And when China came in, that was it, done. The Europe, US manufacturing industry completely hold out unless you were the best in class, which was Germany and Japan, because they had great high quality, so they didn't compete on price. Everybody else got killed and wages just didn't go up. And the labor force participation rate started falling.
Right.
Then those people, the baby boomers, had a record number of kids, 80-something million of them. They all came into the labor force recently. They're all hitting 30. So now you've got these, and the baby boomers aren't leaving the labor force because they can't afford to. They never made enough money, had too much debt. So now you've got two massive cohorts and a globalized world and technology. And I'm like,
and 1.8 trillion in student debt.
So no wonder everybody's angry, and they don't know what the anger is about. The anger is the fact that their quality of life over time has diminished because wages didn't go up. And it wasn't a function of necessarily because we left the gold standard. It wasn't because of, there's more rampant inflation. It's because there was too many people competing for jobs, both internally and externally. And then we're competing against computers. So nobody understands why. Why can't I get out of this trap? Why does the American dream not mean anything? Why can't I do that? So they get angry and it becomes political. And it's the banks, it's their problem. It's the central bankers, it's their problem. It's not any of these problems. It's humans' problems. Again, we are our own worst enemy. We always have been. So that's my take on this. And it's very different because everybody wants to blame everybody else. But really, I think it's demographics.
That makes a lot of sense. So how does that play out in investing? Because last week on, going back and forth, well, throughout Twitter, you always get people that aren't just invested, they're emotionally invested in XYZ. And I'm very bullish gold and Bitcoin and all these things. But when I see people that are emotionally invested, I get a little concerned. And I layer social media on top of that. I'm like, wow, how does it work today?
Well, you were dead right in your observation. And I've noticed this. I'm like, I went out of my way to find out who are these people getting really aggressive about Bitcoin with me? The people who are saying there can only be one, the kind of zealotry over. Now, one thing is fascinating is those systems of stores of value, gold and Bitcoin or anything else, they've got an embedded behavioral incentive. If I can persuade you, it goes up in price. And and I'm going to benefit. So therefore, it is in my economic interest to be a zealot because I'm incentivized to do so. And it's the same as the missionaries. That's what has that religious connotation about it, because it has this behavioral incentive system, which is we get more power if we convince other people to come into our religion. And we do this by a number of things. But the most obvious one is by saying, well, if you don't believe in my God, you're going to hell. Right? The ultimate penalty system. Right, that's a behavioral incentive. It's the opposite way round. So, and I will go to heaven, right?
Or if you don't buy Bitcoin, you're going to be poor. And
that comment really angers me. Is have fun being poor.
Yeah, exactly.
And it's the religious connotation. I was going to write an article about it, and I stepped back from it just because I've noted this too. But I also understand it's also a feature. It's a bug and a feature.
Yeah, see, that's what I wanted to get your opinion on. I was trying to think that through, and I put that out on Twitter. I'm like, okay, it's got this cult following. It is what it is. Is that good or bad for the price? Because I always listen to Chanos. And Chanos always talks about cult stocks being a potential short. And because there's so much emotion around it. And I'm like, okay, I get that. But then I look at Tesla, which is a cult stock. And that cult has driven the price up to the moon. So I don't know, is it good or bad?
Well, because again, humans are narrative-driven creatures, right? Storytelling is as old as humans. And what's so interesting about both Tesla and particularly Bitcoin or gold is it has the embedded savior within it. And because it's money itself. It's not like a stock because you've got nowhere valuing it really. Yes, we have the stock to flow and a bunch of charts, but really it's Metcalfe's law. It's just an adoption of trust. And how far can that go? If that trust collapses, then it's worth nothing. Same with all money. Same with gold itself. If we don't trust gold, if we don't believe gold has value, it has no value. So there's that kind of whole embedded thing. Tesla, what's interesting about Tesla, it has an embedded kind of God philosophy in it as well, which is that this technology is going to change the world.
Right.
And yes, it is going to change the world, but does all the profit accrue to Tesla? No, but the narrative does. And so it's why these things have been so successful, because again, they're all about a future change. Apple doesn't get that because it doesn't have that narrative. It doesn't have, if you invest in Apple, everything's going to change and things will get better. So if you're a millennial and you can see the issues with climate change and you want to do something about it and you're angry because the baby boomers don't, and governments are still pandering to the baby boomers, but the younger people all want to do something about it, well, Tesla is the way to drive your narrative. And Bitcoin is the same for those people who've been screwed over by this wage deflation and globalization and all of this thing. Bitcoin is the one God that could save them.
Right.
Because they can get a chance to accumulate wealth and they don't get a chance. And I think that's true. I don't think it's a false narrative necessarily. I don't think Tesla is a false narrative. Tesla's more difficult because it's a stock, and clearly he's a showman and a bit of a fraud. But what that whole thing stands for, he's now got access to unlimited capital, so he's fine. So there's that's not going to go wrong from here. Sure, it can fall in price, but this Bitcoin narrative is really interesting because it drives at the heart of everything being wrong, and there's something that can change it. Gold favors people with the politics of nostalgia. If we only went back to how it was, and they look back and think the 1950s was a glorious time. Well, guess what? In the 1950s, none of these baby boomers were in the workforce. They hadn't had to borrow money. Of course, it was a better time in some respect. Obviously, not really either in longevity of life and quality of life terms, but that's how they perceive it. So gold has that nostalgia about it when the times were better, and Bitcoin has that optimism about it, as this could be different. And the kind of crypto anarchists and others hook onto the narrative of we could have a different way. And I keep saying to people, stop thinking about what you think it's all about, and you need to follow what it is actually about, because people want it to be this libertarian, unregulated world, but that's not happening.
Yeah. I mean, I would be one of those people for sure, but from a philosophical standpoint. But I look at reality, and I did a video last week, and I went through that full reserve and free banking and whatnot, and people that are hard money folks, they want there to be a limit to the supply of money. But they don't realize that even under the gold standard with free banking, when there was no government whatsoever, we had fractional reserve banking, so they could increase the supply of money. And when we were under the gold standard, going back to what Hume was saying, he was the first one I found that really thought about the flows with gold going from one country to the other, where there would be more gold going to XYZ country. Therefore, the money supply would increase, prices would increase. And although it wasn't a global phenomenon, you would still have money supply increasing when there was a scarce amount of quote unquote money. It's still a system that I don't think we can get away from. But go ahead.
And to go back to your philosophical discussion about, okay, what could that world look like? Again, the Eurodollar market existed, and you're dead right. And Jeff Stein's dead right. It existed because there was not enough dollars and people needed access to it. So if you go to a Bitcoin system, people want access to more of it. And so we will see, as we're seeing already, the rise of DeFi, the rise of yield curves, the rise of leverage, the rise of derivatives, the rise of other lending based on the back of it. And so the cycle will repeat.
Yeah. And how do you think social media plays into what we were just talking about? When we were going over, let's say the cult pros and cons with Tesla or Bitcoin, I think, going back to what Janos was saying, and he always says, well, Enron was a cult-like stock. And I'm not comparing Enron to Tesla or Bitcoin, but I was thinking about that. I'm like, yeah, but we didn't have Facebook. We didn't have Twitter. We didn't have Instagram. We didn't have all these ways of connecting in real time. Is it different now to where back then the cult component may have been a negative, but maybe now it's a positive? Or is it a positive short term and a negative long term? I don't know.
Well, for Bitcoin itself, it's all about adoption. Does the narrative win adoption? And I've said the crypto anarchist or some of these narratives will win full adoption. So they're going to have to allow regulation and institutions to bring full adoption. So if full adoption is what you want, then you have to bring more people into your religion. And it's a religion of trust in money. And I don't have a problem with it at all. So I'm not using it as a slur against Bitcoin. I think it's a feature, not a bug. It gets a little too tribal, which is the bug for me. But social media, this is where it gets difficult, because it's, again, the rise of behavioral economics is you can affect different people by telling them different stories. And you can have multiple narratives at the same time. And that's what's going on in the crypto space. It becomes you versus me, because you like Ethereum and I like Ripple and somebody else like XRP. And what it becomes is I want my value system to go up because I'm desperate to make money. And therefore, my answer online is it's to the exclusion of all others. Now, those of us who are investors have never looked at the world that way, because that would be ridiculous. But when you're fighting for your own system of money and a way of making your own wealth, you're driven by those narratives to say it's us versus you, because you want more of the capital flow. Now, I think that's also a feature of 2016-17 bull markets, when you didn't really know who was going to win out in this. But right now, it seems to be opening out. And as institutional money comes in, there's plenty of opportunity for tons of these projects to do well and tons of them to fail in the perfect way that capital systems allocate capital over time. So I just don't worry about that. But I understand from the beginning, in that world between, let's say, 2013 to 2017, it was a fight for who can get the most trust for their network.
Right.
Same with social media, why Facebook won and Friends reunited didn't.
Yeah.
It's who could drive the most trust and the most connections.
Yeah, I just think that social media gives human beings just that echo chamber, and it enforces it through their algorithm. And you create that echo chamber with this narrative that you're referring to, and it exacerbates it 1,000 times. And it's just interesting to see how that will play out over the long run in the actual price of XYZ asset.
Yeah, I mean, dead right. And then we've seen that this kind of feeling of unease that's been driven by some of the factors I've talked about has also made people more tribal, and us versus them. And it's become politically tribal as well. So everything gets supercharged much more than it normally would do. People are much less tolerant of each other now because of these super narratives that are grabbing holds of whole large groups of people online in different ways, whether it's anti-vaxxers or whether it's crypto enthusiasts or whether it's, whatever it may be. There's these super narratives and you can't escape them. I mean, my Twitter feed I can barely use any longer because it's now swamped by crypto stuff. Yeah. So I'm missing, if you're writing a comment on bonds, I don't see it right now because of the algorithm, and it's really hard.
Yeah. I want to switch gears because I know we're limited on time, and I've got just a million questions that I wanted to ask you today. These moments for me are so precious to have the opportunity to sit down and talk to you. And I want to steal a question from Bill Fleckenstein. I want to give him all the credit. And he brought this up with Jim Rogers, who's my favorite investor of all time, with your good buddy Grant Williams on his podcast, The Endgame. And it's a question that I've heard Bill ask quite a few times. And that's what happens in Japan or to the yen if they have a debt jubilee.
The question is, what happens to the Japanese capital base? Do they invest at home or go abroad? It's a simpler question as that. And my guess is if there is no Japanese government bond market, so we've got it all quits, we're down to zero debt. Where do those tens or hundreds of trillions of dollars go? They need to look for investment opportunity abroad. So I think the yen collapses. I mean, truly collapses in that situation. And not because of hyperinflation, loss of faith, just the natural reaction of the pension industry, the insurance industry, and all the investments, which is if the bond market doesn't really exist in any size any longer, everybody has to leave to find a market that suits it.
Oh, I see. Okay. So I had that one written down. The next one I had written down is an idea that I've had for a long, long time. And I just want to get your opinion on it to see if I'm crazy for thinking this way, or maybe there's actually something to it. And I always tell the people who comment on my videos or on my live streams or whenever I'm giving advice that try to think about portfolio construction just as much, if not more, than you think about what individual assets you're potentially buying. And I always use the example of Buffett, Druckenmiller, and Jim Rogers. And this takes me back to my days playing blackjack. And I used to use this thing called a binomial calculator, which is a real geeky thing, but it basically, it tells you the odds of XYZ happening. So in my mind, the reason Buffett was successful is because when he, designs his portfolio, he's taking bets that have a high probability of working out. Therefore, he doesn't have to take that many bets for mathematically for him to be successful over the long run. Where you compare that to Druckenmiller, and he has, admittedly, he has a lower percentage of success. Let's say 55% of his bets actually work out, but he takes a lot more bets. So he has the law of large numbers on his side, just like a casino, as an example, where Jim Rogers takes very few bets, like Buffett. So he doesn't have that benefit of the law of large numbers on his side, but his bets are so wildly asymmetrical, going into North Korea or something like that. And they don't work out as often as Buffett's do, but there's so much asymmetry that, again, the math is on his side over the long run. So I look at those three people as individuals, or their individual styles, and understand the math behind it. And then I try to emphasize that for people so they understand that if Jim Rogers tried to do what Warren Buffett does, or Stan Druckenmiller with a portion of his portfolio, it might not work out, because then all of a sudden it would skew the binomial calculator to, over the long run, he might not have an edge.
So how I looked at this, and I wrote a whole tweet thread about the investment tribes. And I said there's three tribes. One is the standard deviation tribe. They're the people who look for the normal events and mean reversion. And Warren Buffett will be of that. i.e., you've got a low propensity to take risk, but what you're doing is looking for the higher quality investments and assume that over time that will pay out. Then you've got the long tail tribe, or which is those people who look for the more extreme events. And most of the gold community, the Bitcoin community, fits within that. But there's plenty of other bets that are in it. A lot of these guys who've traded these asymmetric bets play that. And it's trying to figure out what are the odds of that tail and the normal distribution being mispriced. And then I call them the kind of two standard deviation crowd. And that's where Stan Druckenmiller probably lives most of his life in the one standard deviation thing, but he'll flip to two and sometimes to three when he sees opportunity where the distribution is mispriced. I think over time that two standard deviation tribe tends to be more robust because they tend to take less structural problems. So a lot of the one standard deviation tribe are the volatility sellers, the implicit volatility sellers, people who sell credit, who sell CDS for yield investors. And those guys do well blow up. Now, not all of them do. Buffett has that genius thing of his cash flow, which acts as like the support cushion for all of what he does. Stan Druckenmiller doesn't have that fragility necessarily. He's exhibited it once or twice, but it's very rare. And the long tail tribe tend to lose all the time and then make huge. So this year was one of the years that they all made. So it's fascinating. There's different ways of doing it. I prefer that middle ground, which tends to be that macro area in the middle, where you can be kind of quiet in your investments and just look for the ones and twos. But when you see something, you can question and say, this narrative is not going to be continuing, and it can change. And it's when it can change that is when you can make the really big money.
Yeah, so that takes me to my last question. I was looking at my clock here. I know you got to get to another interview. So I won't ask the entire question because I was going to see if you could outline your whole thought process from A to Z on why you kind of went all in with Bitcoin and Ethereum. But what I will do is suggest everyone watching or listening right now to check out the Pump podcast that you did just the other day, or came out the other day, where you explained that extensively. But the one question, the short question I've got for you regarding that is, when you were outlining your thought process, I was wondering if that greatest trade story that you told, maybe, I don't know, was it maybe 2 years ago, something like that on Twitter? I was thinking, I wonder if that was in the back of Raoul's mind.
No, I actually did that trade again. It completely perfectly replayed last year in bonds. It was a complete, even when he mapped the charts between 2001 in Eurodollars and 2001 in bonds, and that 2001-2002 period, and the period that we just had in 2019, they were perfect. So I did that trade, and it was great. it wasn't as great because interest rates didn't go from 6% down to 1 or whatever, but it was a great trade and you get plenty of leverage. No, this is a unique bet altogether. It's a unique bet because I think it has the propensity to have the largest reflexive loop of anything, because we've talked about the power of narrative here, right? We've talked about the benefits of the tribalism and the protectionism over the space. We've talked about institutions coming into the space, but then you get this weird thing is it's been such an obscenely good asset class in terms of its risk reward profile, unlike anything I've ever seen in my career as a whole asset class, that the institutions have no choice but to get involved. And we've seen the hedge funds first and the family offices. But what becomes really fascinating is the more it goes up in price, the more the market cap of the asset class goes up, the more it brings in other investors. So, and that brings in retail, and the more the price goes up, the more it brings in investors. So you've got almost a gap risk to kind of the same size as the gold market, $10 trillion embedded within this. And that's a reflexive loop unlike I've ever seen before, because it's not, I want to have it, it's I need to have it. And those need to have scenarios are incredibly powerful. It's the same narrative that drives put buying in bear markets and stuff like that, or treasuries in times of economic weakness. I need to have it. Not, oh, I quite like some treasuries here. This whole thing has got that kind of setup, which when you play into the whole philosophical new future optimal and Metcalfe's law and the vision of a different financial system and the central bank digital currencies, I mean, that's a super narrative laid on top of a super narrative. So, you know, that I think is why Metcalfe's law is so powerful in this, in this adoption.
Yeah, and you talked about every maybe decade or so, the big hedge funds and the big family offices, they have to have this strategy, whatever is in vogue.
And it's not only that, it's also the corporations, the internet strategy from the 90s, the computer strategy from the 80s and early 90s. And then it became the China strategy in 2003. I mean, I'd go to a bar in Shanghai and there'd be all of these Westerners in the bar. So what are you doing? I don't know, I've been sent by my company to figure out our China strategy. They knew they had to have an answer to their investors. Then it became your social media strategy in 2010. Then it's rapidly becoming two things. One is your video strategy. The whole world's pivoting to video. And the other's been artificial intelligence. And I think Bitcoin is another one of these super narratives. And they tend to go a long time, 10 years of everybody having to adopt it. And they're all real adoptions. They have bubble phases in the middle of them, but they're all real. I mean, they're all here to stay. Yeah.
So this takes over, and these flows, these capital flows take over, and it creates this like opposite doom loop. You've talked about the doom loop all the time, which is kind of this positive feedback loop, but in a downward spiral. This creates the opposite going up and I know a lot of people in the comments right now are going to say, oh yeah, but the governments will ban it. And I totally get that. I think they'll make it illegal, but I think it'll most likely have a hell of a run before it's a big enough player for the governments to
yeah, and I'm not sure I've read all the IMF papers, the BIS papers, the ECB, BOJ, all of these guys. None of them have talked about anything except regulating crypto on the on-ramps and off-ramps. They just want their tax. They want their tax, and they don't want it to be used for illicit activities that are within their jurisdiction. That's it. Now, do they try and do something in due course and try and get rid of it? Well, there's going to be another jurisdiction that allows it. That you can't stamp something out on the internet. China's tried to ban it. Russia's tried to ban it. India tried to ban it. All of them failed. So I don't think it gets banned, but sure, it's a risk we need to price in.
I wonder if they made it illegal. I know they literally can't ban it because it's code or whatever. But if they made it illegal with a very severe penalty, say 25 years in prison, and then you've got a lot of people that would just leave. I understand that, but a lot of, especially at mass adoption, you got the guy in the country club with his wife and his kids are in private school and he's driving.
But the question is if you've allowed institutional adoption, what do? You turn around to BlackRock and say, oh, screw all the pensioners who you've just put into Bitcoin.
Yeah, right.
I don't understand how you can do that without losing. I mean, that's your voter base. You're going to destroy their wealth because you'll have driven institutional adoption by regulating it. and then shutting all these people out. I don't
But they did that with gold. But they did that with gold.
Gold, again, this is a false narrative.
Okay.
So gold, they did it in the US, and the US gold flowed to Switzerland and elsewhere. Gold around the rest of the world traded freely. Americans look at this as their own personal narrative, but it didn't happen anywhere else.
Mm.
So it wasn't a global phenomenon.
Right.
And in the end, US citizens held gold, but offshore. It's always been thus. Same with Turks right now. They're not supposed to be using gold. So they use Bitcoin. Everybody finds a way of circumventing capital flows because they always have.
All right, buddy. I know you're short on time. I appreciate you hanging out this long. For all my viewers who want to find out more about what you do, should they just go to Real Vision and check it out? And I suggest everyone do so. I just want to reiterate that I've never taken an econ class in my life. I've never taken a finance class. I almost flunked out of high school. And I owe almost everything, or a lot of what I know, to sources just like Real Vision. So if I can do it by watching Real Vision and being a huge fan, then you can too.
Yeah, I mean, that's amazing. If people go to Real Vision, they can take a trial, costs $1, and you can check it all out there. If your focus is just crypto, we've got a free crypto channel. So you go to realvisioncrypto.com, or just on the normal Real Vision homepage, at the top, there's the crypto button. So you can do that. Either way, get involved and get learning, because there's a whole new world out there. And these are really important times, whether you're looking at traditional finance or you're looking at the new world of finance. And, you know, we all owe it to ourselves, because nobody's going to help us. We need to help ourselves get up the knowledge curve as fast as we can.
Absolutely. Raoul, appreciate it. I cannot wait to do it again, my friend.
Absolutely. We'll get you on Real Vision next time.